Success is not the absence of failure, it's persistence through failure. Aisha Tyler. My friends, 10 to 15 minutes a day. When you first start this, you may not be very good at it at all. But if you practice, if you spend 10 to 15 minutes, you will figure this out. You can do this. I'm your biggest fan. Again, go to the website, sign up at chartingwealth.com. You will get every day our daily reviews, our once a week weekly review and forecast. They're PDFs in those emails every day for the daily market worksheet, weekly market worksheet, and trade worksheets. Plus, in your show notes every day, you get the special trainings that we put out on a daily basis. Today, how we use complexity theory in investing and trading. A great training you will get lots out of. You want to support us? Patreon membership is available. Patreon members, check your emails. We just sent you the 20 weekly vertical crossovers. We had 7 going up. We had 13 going down. And they are in your box right now for you to backtrack and practice trade. A few of them tomorrow at the close of the market. That is the way we do it. If you don't have our book, Charting Your Way to Wealth, follow the link in the show notes. Let's jump into these charts. Things are moving as they should. What do I mean by that? I mean stocks are down and the inverse is true for bonds and gold. They are up. That is the way a healthy market probably should work. Stocks aren't doing well. Money goes to other things such as bonds, such as gold. We see Bitcoin rebounding strongly, at least as far as the New York Stock Exchange Bitcoin Index, which we have some questions about we're still trying to resolve, but that's what we've been charting. That's what we'll stick with for charting, practicing purposes for right now. First, let's jump into the S&P 500 down 0.42% for the day. We see the price percent oscillator slowly pulling away from the red signal line. Red open box candle, a slowdown in the up movement. Haven't hit the high from the prior week. Derivative oscillator positive, losing momentum. Boom. What do we see happening? We had the the 2-day recross going in the same direction as the negative weekly at the close of the market today. How many of you were interested and jumped into that? Did you practice trade it? Well, we shall see how that goes for you. There are things that could have made it, of course, better. It was nice that the 2-day trend line fell apart. That's good to see that it continued to cross over there. We had the price percent oscillator crossover going down. Now the derivative oscillator is still positive. We look at the half day. Again, up some in the morning, dropping over in the afternoon. That's pretty. Derivative oscillator gaining downward momentum. Price percent oscillator heading down. So let's see how that 2-day recross plays its way out. It would have been nicer, of course, again, for things to be perfect doesn't happen all that often, but it would have been nice to see the derivative oscillator go negative as the price percent oscillator pulled away from the red signal line, but that's not happening. But it did lose energy, so that's good to see. As we see that happening, rather, it is the weekly chart, so it doesn't finish drawing until the close of the market on Friday. But it would be good to see that going negative as the 2-day, of course, crossed over going down. So that's where we are. Not a perfect world. You do what you do based upon your experience and your backtracking and what the charts have shown you, of course, in the past. That's what backtracking is all about. That's what experience is all about. It's always backward looking to help you forecast what's going on in the future. Let's go to the Nasdaq 100 down for the day 0.34%. Price percent oscillator is positive flat. Derivative oscillator losing momentum. We have a green up candle for the week, not reaching a higher high yet. One more day for that possibility. What do we see on the 2-day? Well, we see things stalling. A doji means lots of indecision. Price percent oscillator positive heading down. Derivative oscillator positive losing momentum. We look at the half day, and it's continuing to pull away from the red signal line, accelerating on the derivative oscillator heading down. So we need to redraw that trend line. Not the best of trend lines. We'd like them to really be moving up or down, but that's okay. We've got that noticed. So we'll continue to pay attention and see how the Qs shape up. What about 20-year bonds booming up for the day? 1.21%. Still positive, of course, on the price percent oscillator. Derivative oscillator still losing momentum. This is on the weekly. We have a red spinning top that's forming. It's one of many red spinning tops we have seen. Open box one prior, then last week a red spinning top. This one, lots of down movement on it, some up movement too. But again, still positive as far as the price percent oscillator goes. What about the 2-day? It's still negative. Now, if stocks continue to move down, bonds continue to move up, you might have a 2-day recross in the not too distant future. The next time that could occur is 2 days from now, since we just had the 2-day finish drawing, so that'll be the Friday, Monday candle. So we'll watch and see. Derivative oscillator still negative, price percent oscillator still negative on the 2-day. And we saw the half-day crossover in the afternoon with a big surge heading up. Price percent oscillator positive now, derivative oscillator heading up, which means, of course, we can redraw. Oh, I just messed that up. Here we go. We can redraw the half-day trend line as best we can. Not a great one. Remember, we like to connect 3 candles. Let's make sure we get our 2-day trend line set back to where it should be. There we go. Okay, now we'll move on to gold. What do we see there? Gold up for the day, 0.44%. We have a red spinning top, did not have a crossover going down. So those of you who jumped into that trade, you still have some excuses for potentially still being in that weekly vertical crossover. Derivative oscillator gaining upward momentum. Hopefully, gold will start recovering, particularly if stocks start going down. We look at the 2-day, and of course we have 2 down candles, and the weekly, like I said, still holding on there. It doesn't look like it will, unless there's a big down surge, we could have that 2-day crossover, the weekly crossover rather. The 2-day is still holding its own, far away from crossing over, going down, even with 2 down candles. That is really a fake 2-day candle, the one from Tuesday. Markets were closed Monday, but the charts counted that as a day. So it's really a 1-day, 2-day candle. Price percent oscillator positive, heading down. Derivative oscillator losing momentum. Half day, we can see where, again, things sort of bottomed on gold. Maybe they're going to be moving up. Don't know. Again, don't forget, apply your profit and loss bands. Pay close attention to what's happening with the 2-day and the weekly. If there's a big down day on Friday, that weekly could hammer right through going down on you. I don't think that's going to happen, but it could. So keep an eye on that. Lastly, we'll go to Bitcoin. Up 12.45%. According to the New York Stock Exchange Bitcoin Index, we can see the derivative oscillators lost a little bit of energy, have hit a higher high for the week. Price percent oscillator is about flat, positive 2-day. We can see where things have headed down strongly on this latest 2-day candle. Red spinning top, price percent oscillator positive, but heading down. Derivative oscillator losing momentum. So pay close attention to that 2-day chart. What about the half day? Again, you can just see where things are tracking along, just tracking along sideways on the half day. Again, represented according to our percentage change in the charts, 12.45% increase, but that derivative oscillator pairing off, and again, looks to me like a big sideways slide there. So we do have questions about what's actually going on, because we look at the grayscale, we can see that it was down for the day 0.19%, but here's another weird one. The Bitcoin fund up 0.39%. The whole reason that the New York Stock Exchange Bitcoin Index was set up was to start tracking it with hopefully the development of derivative markets. So this is rather odd. Those of you who know more about Bitcoin, if you want to share your knowledge with us, we would of course appreciate that. We never started tracking Bitcoin to begin with. You guys just asked us to do it. So we applied it to our charts. And as you can see from our charts, From the chart we are using, the New York Stock Exchange Bitcoin Index, it has been extremely accurate, but we'll see as we move forward. That's where we are, folks. God bless you all. Hope that you are looking forward to a wonderful weekend coming. Thank you again. There are just a few slots left at the $30 Patreon support level. You can see all the benefits you get. The biggest, of course, is going to be those 20 weekly vertical crossovers on the S&P 500 every week to give you something to practice trade. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.